I'm here with Jim Polk, head of equities at Homestead Advisers, to have a conversation about the uncertainties that the markets are facing today. Jim, what are your thoughts on everything that's going on in the U.S.?
Yeah, well, there's been a lot going on, obviously, and I think I would start with the beginning of the year when expectations were really high for a new administration coming in with pro-economic policies, maybe less regulation. As I said, expectations were high, the multiple was high, and what we've seen over the last couple of months has been a lot of stuff that surprised people, and I think one of the biggest ones has been tariffs, and that's put a lot of companies on hold, a lot of uncertainty, how inflationary that might be. And so that's, I think, caught the market by surprise, that some of these policies coming out were not maybe quite what people expected going into the year.
Well, so you also touched on inflation, which, the Federal Reserve, the markets were jittery in 23, 24, but progressed nicely, and it was all about inflation. And, is inflation still a concern of U.S. corporations as we look, throughout the rest of the year?
Yeah, I think it is. I think certainly I would layer on top of not only the tariff policy and uncertainty, but also immigration might have something to do with it. And so everybody's worried about, hey, could all these things end up being very inflationary, which would mean that the Fed would be on hold, and we could have a situation where the economy is slowing and inflation's a lot higher.
Well, so inflation, you touched on stagflation right there. Unemployment still remains at good levels. Where are we into a stagflation? Or are we starting a recession? And I know we're not economists.
I was going to say, yeah.
But what are the companies that we follow and the management teams that we speak with? Are there any concerns in either those two regards?
I think we're seeing a slowdown in economic activity. That's certainly showing up, and consumer confidence is certainly waning. The companies are on hold, I would say, or on pause to see what's going to happen with tariffs and just how onerous that could be. And so there's kind of a cycle that's happening here where we're getting a lot of rhetoric, a lot of concern, the consumer's pulling back, then companies don't know what to do, and so it just goes around and around, and I think that's creating some angst in the market. And I guess I would add to that the markets really don't like uncertainty. And so
and people don't like uncertainty. So I guess the final question is, we touched on inflation, we touched on tariffs. You just touched on consumer sentiment, which has been, kind of deteriorating. Is there anything else besides those big three that U.S. companies are faced with, and really how the markets are reacting, or those are the big three to follow?
I think those are the big three. Of course, we look at it as value investors as a great opportunity to look for high-quality companies that are maybe kind of baby with the bathwater and have been sort of unfairly punished by concerns. And so this is, I think, if you're a value investor and you believe in kind of the long-term economic growth of the U.S., this can be a great opportunity.
Well, we've got 3 quarters to go. We're coming up on the end of the first quarter, and looks like there's some opportunity. So you sound optimistic. Is that a safe, are you still as optimistic in the U.S.?
I'm optimistic for the long term. I would say
that's
absolutely. And that's the way we invest. In the short term, I don't know, but we'll see.
Great. Thanks, Jim. Appreciate your time, and thank you to all our investors.